This is Macro Analytics, delivering frank conversations on global macroeconomics and market analysis, outside the mainstream, featuring discussions and debates between Gordon T. Long, publisher and editor of GordonTLong.com, and his guests. The content of this discussion is strictly the opinion of the participants. It is in no way a solicitation for business, nor is it to be considered investment advice of any sort. Always consult a registered investment advisor before making any investment decision. These discussions are extremely hard-hitting and terribly frank, and parental discretion is advised. Now, on to the show.
I'm Gord Long with GordonTLong.com. As part of our ongoing series on financial repression, I have Jim Rogers joining us this morning from Singapore. Jim is a well-recognized investor, best-selling author, and frequent financial commentator. He co-founded the renowned Quantum Fund in 1973 with George Soros. Welcome, Jim.
I'm delighted to be here, Gordon. Thank you.
Well, we're delighted to have you join us on this subject. Jim, I don't want to waste any time. I want to jump right into it so we have lots of time. We're here as part of this series on financial repression. How would you explain to our listeners what that terminology means to you, financial repression?
Financial repression can mean many things, but basically in a nutshell, it's a lack of free market in finance and in human activities, where the government thinks they're smarter than we are. And history has shown many times that we are smarter than the government, we're smarter than politicians, we're smarter than bureaucrats, but they don't like to give up power. And when they make mistakes, they blame it on us and try to make us pay for it.
Is that what's going on with financial repression? They're making us pay for overspending in the past?
Oh, absolutely. I mean, it's very, very serious. When they see a problem arise, their first instinct is to suppress the public, suppress the markets, and do something that they think will make things better. Of course, they don't. They always make it worse. When problems arise, they put on exchange controls, for instance. That's a time-honored way that bureaucrats and politicians have tried to correct mistakes that they have made. No, we'll have exchange controls in the U.S. again. There's no question. We already do have exchange controls to some extent. FATCA and other things are making it more and more difficult for anybody to do Americans to do anything as far as finances are concerned. There'll be others. They'll put on trade controls, tariffs, quotas. They'll come up with all sorts of things.
Well, we've just had a whole series on FATCA, PFIC, and most of the experts on say we already have informally capital controls in the United States. But when you say they, Jim, we're not talking about just the U.S. government. We're talking most of the developed world in terms of financial repression, these kinds of policies, or are we?
It's not just the developed world, it's the whole world. That's bureaucrats and politicians since the beginning of time. When they make mistakes, they blame other people.
Do they really?
It's your fault, Gordon. Don't you understand?
Oh, I do. I feel it every day when I pay my taxes and other things. Do they know what they're doing? And when I say that in terms of of quantitative easing, zero interest rate policies, they don't seem to be working after 6 years. Are we on the right track even with these kinds of policies?
No, of course we're not. Do they know what they're doing? No, they rarely have. As I said before, history has demonstrated and proved many times that the politicians make things worse instead of making things better. Because what they do is, since they don't know anything themselves, they ask how we can save ourselves. And the bureaucrats rush in and say, oh, well, this is the way you save yourself. It's not your fault. It's the market's fault. It's those evil speculators. It's their fault. It's the people. It's the people's fault. And so they come up with whatever controls and regulations that they can. And they don't know what they're doing. Did they know what they were doing with quantitative easing? Of course not. It was a mistake from the very beginning. Some of them have now have said out loud, gosh, we didn't know if it was work or not, or this was an experiment. In unguarded moments, they have admitted it. Well, anybody watching could have told them, and some did tell them, this is a mistake. It's going to end badly. It's not over yet. It's not over yet by any stretch, Gordon. It's going to be much, much worse. We're all going to have to pay a horrible price for yet another mistake made by the bureaucrats.
How does an investor protect themselves then? What should kinds of things? I'm not looking for investment advice, but what kinds of things should investors be doing or thinking about?
Well, the first thing investors should do is only do what they themselves know a lot about. Don't listen to me or anybody else if you don't know what I'm talking about. For goodness sakes, do not do something where you yourself don't understand it perfectly. Second, everybody should certainly know about having assets outside their own country. I mean, we all have fire insurance. We hope we never use our fire insurance. But look upon, international diversification is a kind of insurance, if nothing else. You hope you never use it. You hope you never use your life insurance policy, but chances are you will. So diversify internationally, if nothing else. And if you don't know about other asset classes, please, for goodness sake, learn about them, because there are going to be many strange things happening in the next decade.
What sort of things are you anticipating, Jim, when you look into your crystal ball?
Well, we know, history shows that I'm talking about America specifically for the moment. We've had economic slowdowns every 4 to 7 years since the beginning of the Republic. We're going to have them again, Gordon, no matter what people tell you. If somebody tells you we'll never have another economic recession or slowdown, please, please, please put your money in your pocket and head as far away as you can. So they're coming back. The next time it's going to be much, much worse. In 2008, we had a big problem because the debt was so much higher. You know, the 2008 problem was worse than the one at the beginning of the century because debt was so much higher. Well, the next time around, debt is much, much, much higher than before. So the next problem is going to be much worse. There's very few people in the world who have lower debt now than they had in 2008. The Federal Reserve alone's balance sheet is quintupled, with lots of bad debt, some good debt, but mostly bad debt in that period of time. You look at every country in Europe where they talk about austerity. Every one of those countries has higher debt now than they had last year, and they'll have higher debt next year. So the world's facing a huge, huge problem, which has been exacerbated by all of this gigantic money printing. We've never had in recorded history all the world's central banks printing huge amounts of money at the same time. So there's a huge artificial ocean of liquidity floating around out there. And when all this ends, Gordon, next time around it's going to be worse. And if they tell you it's not going to happen again, please, please.
Head for the door.
Head somewhere.
Grab your wallet and run. That's what I'm hearing you say.
Get somewhere, because if they tell you it's not going to happen, just remember, it's going to get worse. It's not going to get better.
Jim, it appears the global economies are definitely slowing quite noticeably. We in the United States can see that we're bordering on just barely positive economic growth measured by the GDP, but a recession is a real possibility here in the United States. But when you have zero interest rate policies, what do you expect the government to do if we start to fall into a recession?
Gordon, you said possibility. I want to repeat. It's not a possibility. It's a certainty. Unless the world has changed very, very dramatically and we're never going to have recessions again, it is a certainty that there is going to be another recession in the U.S. and therefore in the world in the next couple of years. What will happen as the economy gets bad? They'll panic, and then they'll start to print lots and lots of more money, because they don't know what else to do. They think that's the solution. Congress will start spending lots and lots more money because they don't know what else to do. If people get in trouble, they will prop them up. Some people they will prop up. Now, there's more than one way to prop up somebody. For instance, now the government in the U.S. and other places has the authority to make the depositors pay if a bank gets into trouble. They can just confiscate part of your bank account. That's a law which changed since the last recession. So certainly, if you have too much money in a bank, be sure that to know they're going to take some of it away from you to save the banks. Which, of course, is the wrong policy. They should let the banks fail, but the banks give them a lot of money and have a lot of influence in Washington. So they will try to save as many banks as possible. There will be exchange controls, more extensive exchange controls coming up, which is one reason I urge everybody to have some diversification outside the U.S. while it's legal and honorable and moral. They will undoubtedly put in trade restrictions as well. More tariffs, more quotas. I mean, these are things that they've done since the beginning of time. They usually make the situation worse, but since they don't know anything else, they'll do it. Now, the Secretary of the Treasury in the U.S. in 1940 was second most powerful person in the U.S. after the recession. And he said in 1940, none of this has really worked. All this government spending and debt has left us with nothing more than just a lot more debt. It didn't work. And even Keynes at the end of his life said, a lot of this stuff didn't work. This was all a mistake. But unfortunately, people like to think they're doing something. They think if they take some action, it's going to make things better, and often it makes it worse.
One of the actions we're seeing, and it goes back to your point about bail-ins being the next form of if saving the banks, if you would, that is, depositors really are on the hook. But there's seems to be a momentum or movement towards a war on cash, or moving to a cashless society where the money's locked into the banking system and you can't get it out. Any comments there or observations?
Well, I see the same things you do. Yes, politicians don't like cash because they can't control it. And we are, for better or for worse, moving away from cash, if you will. And as you know, in some states already, it's against the law to spend more than a certain amount of cash on some items. In France, in some European countries, you cannot use cash above a very small amount of money. You just cannot do it. It's illegal. So they're already moving in that direction. And with technology being what it is, we're getting to a period when conceivably we don't need cash, which of course the politicians love, because then they can follow every single thing you do. If you buy a cup of coffee, they're going to know it. If they don't want you to buy coffee, they're going to block you from buying coffee.
Jim, on that subject, but it's slightly different, we have $5 trillion of sovereign bonds trading right now at, so it's reported, at negative nominal rates. What's causing that? What's driving that?
Well, it's the same thing. The central banks and the politicians think that if they drive interest rates low, they will make things better. They're really basically trying to save their friends. Gordon, the way the world has always worked is that if you were diligent, hardworking, industrious, you earned some money, you saved your money, you put it aside, and someday you could do something with it to have a better life, whether invested or retire or whatever. These guys have now taken a policy of destroying the saving class. They're destroying everybody who saved their money all their lives. They now have negative interest, but they're destroying the saving and investing class at the expense of the people who did it wrong. The people who went out and bought 4 houses with no job and no down payment are being aided, are being helped by these absurd policies. But the politicians think that's the way to do things. Somebody has told them that. I don't know who's told them that. Certainly not me. But they think this is the thing to do. But throughout history, if you destroy the people who save and invest, in the end, not just your economy, but your society disintegrates too, and you have enormous pressures whenever you destroy those people. And they're destroying those people all over the world now.
I can't comment all over the world, but I will say this. We have completely gutted the middle class in America, and I don't think I'm overstating that. They're just living hand to mouth, and it seems to be getting worse. And when you have a 70% consumption economy, it's very difficult to see how things are going to improve, especially when you don't see the capital expenditure being made.
When their parents are being destroyed even more, their grandparents, if they have grandparents still, are being gutted even more, because they were the ones who spent decades saving for the future, and now there is no future, not even a present. It's a disaster.
Yeah, Jim, being in Singapore, and you've done so much traveling, observations in Asia, China specifically, how does the economy look there? Concerns?
Well, the Chinese economy has been slowing down, partly because the Chinese have tried to slow it down. They had inflation, they had a housing bubble, so they've been doing the right thing, if you ask me, to slow things down. It's happening. The European economies are not robust. Even America's not booming. And those are the customers for the Chinese. So China's slowing down just as many other parts of the world are as well. They also, last time, in 2008, China came through much better than other people because they had saved a lot of money for a rainy day. And once it started raining, they started spending the money. Unfortunately, since then, the Chinese have run up a lot of debt internally. China didn't have much debt ever in the past few decades for many reasons, but now there's a lot of internal debt in China too, which unfortunately is going to make the Chinese situation worse next time the world has a problem. They helped save the world in 2008 and 2009. They will not be such a savior next time around.
Jim, are there answers here? Are there solutions? Not just on this global slowdown? Realistic political solutions?
There are, but will the politicians do them? No. I mean, some countries do let people go bankrupt. The solution is to let the system clean itself out. And the way the world works is we've had these recessions. Recessions clean out the mistakes of the system, and then, competent people come in, take over the assets of the incompetent people, and start over. Well, now what we're doing is we're taking the assets away from the competent people, giving them to the incompetent people, and saying to the incompetent people, now you can compete with the competent people with their money, with their assets. It's terrible morality, not that politicians care about morality. It's also terrible economics. In the early 1920s in America, we had similar problems. You know what happened? They balanced the budget and raised interest rates. I repeat, they balanced the budget and raised interest rates. Now, we had a bad recession for a year or two in the U.S., but then, after the system cleaned out, we had one of the greatest economic decades in the history of the Republic. In the early 1990s, same thing happened in Scandinavia. They let people go bankrupt. They reorganized. It was a terrible couple of years. But then Scandinavia has been one of the strongest parts of the world economy for the past 25 years or so. Sure, there are solutions, and they can be done. They have been done by politicians and bureaucrats and the public voters in the past. Will they be done this time? I doubt it, not until things get so bad that there's no other solution except to let people collapse, let the system clean out, and start over again. At the moment, there's nobody, if you went in and said that, they'll throw you out of the room. They'll look at you like you're unclean. They won't have anything to do with you.
I think that's a fair observation. But, Jim, the world is so much, well, let's just state the obvious, so much more complex and intertwined. A collapse or crisis, it not only could be so serious, it could be extremely difficult to get out of and devastating.
Gordon, yes. But it's going to be much worse if you do the other. If you keep propping up zombies, Japanese had called them zombie banks and zombie companies in the early 90s. They didn't let people collapse. They had a lost decade in the 1990s. Then they had a second lost decade in the 21st century, and their stock market today is still down 50% from where it was in 1990. So the solution, the other solution of propping people up and trying to hope that someday things get better just leads to worse disaster down the road. Yes, I told you it was very painful in the U.S. in the early 20s, but they did it, and it led to a huge boom. It was painful in Scandinavia in the early 1990s, but they did it. And there's been wild prosperity ever since in Scandinavia. Everybody wants to move to Scandinavia because it's been such a good place to live. Not everybody, but many people. So, yes, but the alternative, Gordon, what are we going to do? When the market finally says to these guys, we don't care, we're not going to take your paper money, we're not going to take your bonds, we're not going to play anymore, then what are they going to do? When printing money doesn't do any good, when spending money doesn't do any good, then that's the disaster. That leads to revolution, dictators, war. That leads to all kinds of disaster. Be sure you have some of your money diversified outside your own country, whatever your own country is. I'm not saying the Americans. Everybody should do it, whether you're German or Japanese or Russian or Chinese. Everybody should.
Well, let's talk about diversification. Commodities. You're an expert in this area. Gold and silver. Comments there?
Gordon, I don't know if I'm an expert in anything, but one should diversify. Real assets usually, in times like we're discussing. I mean, if you own a farm and you're a farmer, you're probably going to be better off than most people, but be sure your farm is far away from the marauding masses that they won't come in and steal everything you've got. So having some real assets, especially agriculture, you may not do well, but you'll do better than everybody else in a time like that. Gold and silver historically has been a way to protect your assets or your spending power. But I'm not buying gold at the moment, Gordon. I haven't bought gold for several years. I own gold. I own silver. But I expect a better chance to buy gold sometime in the next year or two. It may not happen. And if it doesn't, I'm there. If it does happen, I hope I'm smart enough to buy a lot more. But real assets, yes. Real assets in times of turmoil, especially productive real assets, such as farmland, are very, very useful, and one of the ways that history shows you can protect yourself. And gold and silver coins have the the attraction that they're easy to transport and they're internationally recognizable. It's hard to transport your farm if you have to get out of your country, and you'd have a hard time taking even a farm in Iowa and selling it in Germany. You'd have a hard time getting it there. They may not buy it, but if you have gold coins, chances are they will buy them if you're in another country and if you need them.
Jim, we're up against our hard line. I really enjoy the conversation. Are there any key messages that you'd like to leave with the listeners?
Yes, just first prepare yourself, be knowledgeable, read about, learn what's going on. Don't listen to the politicians, don't listen to the press. Press, unfortunately, doesn't seem to understand what's going on. So be knowledgeable, learn about what you can do to protect yourself, be worried, and be prepared.
Well, Jim, thank you very much. That's great advice. I have to tell you, there isn't anything I've disagreed with you here, but it's a pleasure to hear it be reinforced so strongly. Thank you for your time.
Thank you, Gordon. Anytime. Bye-bye.
This has been Gordon T. Long, editor and publisher of GordonTLong.com. New recordings are posted regularly and can be found at GordonTLong.com. New show notifications are available through RSS feed, iTunes, and other social networking venues at GordonTLong.com.